For the last few years, the housing market was absolutely insane. The prices were skyrocketing. We experienced a tremendous shortage of homes for sale, and mortgage interest rates were on the rise, reaching 20-year highs. Stream of news about the impending recession and the inevitable housing market crash is unstoppable, leaving many people confused about the future of the housing market. It makes everyone wonder if it is a good time to buy or sell a home here in the Bay Area. Or will ever there be a time when I can afford to buy a home here? Or should I move out of the area? After all, for many, remote work is a possibility. So, which factors may trigger housing prices to crash after more than 12 years of consistent growth? Well, there were two periods of price adjustment, one in 2019 and second in the second half of 2022. But they were very short, and very few people had a chance to take advantage of these short-term price declines. Let's play a few scenarios. First of all, possible housing market trouble may be triggered by the general direction of the economy. To fight out-of-control inflation, Feds jacked up the short-term rate, but their effort did not have an immediate effect. The inflation is still higher than the targeted 2% annually. The expert consensus is that the Feds are done with their rate hikes, but they will keep the short-term rate at higher level longer than was initially expected. A side effect of this is economic slowdown. For now, on the personal consumption level, consumer activity remains strong, and the unemployment rate is still only 3.8%. But according to Freddie Mac economic analysis, the job market should slow down at the beginning of 2024, and by the end of the year, the unemployment rate should reach 5%. They forecast that this economic slowdown will be gradual, and the economy may achieve a soft landing, avoiding massive unemployment that may force people to sell their homes they can't longer afford. Only time will tell if the changes in the economy will be gradual enough to avoid a housing sell-off and the prices collapse, similar to what we experienced in 2006, 7, 8. What do you expect? What are your predictions? Put them into the comments. Higher short-term rates drove long-term rates, including 10-year Treasury bonds, upward, and in turn, pushed the mortgage interest rates up. At the time of this video, mortgage interest rates are approaching 7.7%. Higher interest rates and the reduction of home affordability caused by that did not trigger a price slump across the US and here in the Bay Area. So far, due to the extreme shortage of inventory, the median home sale price continued to grow. There were enough buyers on the market to purchase available homes even at the current elevated interest rates. Freddie Mac and Mortgage Banker Association both expect the home price to continue to grow irregardless of the higher mortgage rates, but at slower pace than in recent years. Here in the Bay Area, the price trend may turn negative in some luxury markets, where supply may outpace the demand. At this point, there is no indication of the housing market overall tipping off into the buyer's territory. Keep in mind that most of the current homeowners were able to lock in 30-year fixed-rate mortgages in the recent years when interest rate was hovering around 3%. After owning their homes for 3, 5, or more years, they have enough equity to weather the upcoming economic storms without selling, without upsetting the current delicate supply-demand balance, and keeping the availability of housing extremely low. Some owners who purchased in the last 2 years since the interest rate started to grow choose adjustable rate mortgages. The most common programs were 7-year fixed and then adjustable loans. They provided the best interest rate savings. Adjustable rate mortgages played a huge part in the last housing crash. But due to the current stricter lending standards, these buyers should have been qualified at the highest possible rate, not at the initial low rate. These are well-qualified, strong borrowers with low expectation of their default. And on top of that, these adjustments should begin around 2028, 5 years from now. I don't see them selling en masse triggering any significant price declines in the near future. If you are thinking about selling your home, it is still a good time. Not the best time, but still a good time. The prices are continuing to grow, homes are still selling fast and with multiple offers. Here in Santa Clara and San Mateo counties, median home sale price grew by 15% since January, and now is only 3% below the all-time high recorded in the spring of 2022. You just have to know where you're going to move, where you're going to live. Finding a replacement home here in the Bay Area may be very hard. And if you're looking to buy a home, make sure to check with your lender prior to submitting an offer. Make sure to update your pre-approval based on the current interest rates. And make sure that you are comfortable with your monthly payment. I would only recommend buying a home if you are planning to stay in the area for 7, 10, or more years. Long-term home ownership is a sure way of building equity and wealth in our local market. This is Michael Talis with the Talis team. With major developments happening daily, if not hourly, it is critical to monitor and report on all the latest trends in the real estate industry. This is exactly what I will be doing. If you found this video useful, subscribe to our channel, support us by clicking on the like button, and please share this video with your friends who may also benefit from it. Till next time.